everybody? It's Omar. Just wanted to make a video building my watch list for Monday. Talk about the one play that I have and I'm currently in, which is Dries. I took it for a short. We'll get to that. I just want to build my watch list. So, I've been traveling. I'm actually about looking to book my next vacation. I'm probably going to take another week off. It's Labor Day week. Probably, I don't know. I'm just undecided yet. I don't know if I'm going to go to Italy, if I'm going to go to Costa Rica, somewhere else. I'm not sure. I'm still kind of figuring that out. So what I want to do is build my watch list. So what I did is what I've done is I kind of changed my criteria. Now I'm looking at stocks that at a higher price range. So I'm looking for stocks between 20 cents and $90 now. I'm not opposed to trading the higher price stocks. As a matter of fact, the higher price stocks, even though you get less shares, your risk reward to me is better because, like, let's say if I take a stock that's $1, like an MBOT. I'm just gonna pick any stock here. I'm just gonna say MBOT. Let me get out of this. Let's say I risk, I buy 2,000 shares, 3,000 shares. Every time that stock goes, 10 cents, depending on how many shares I get. So let's say 1,000, I lose $100. But these bigger price stocks, let's see if I got one. COF. I'll put COF on. Let's just put it on. COF, let's say because it's more expensive, let's say I take 100 share position. All right, if I take a 100 share position, let's say I got it on the pullback and I took a trade off VWAP. Now, let's say when it went against me and I got in at 85.19, it has to go to 84.19 for me to lose at least $100. So, the risk reward is great. And if you notice, let's say had I done this, I'm just speaking in hypotheticals now. In 2020, let's say I would have took this, because this stock opened up, it pulled back, it bounced off VWAP. Let's say, okay, I'm going to take an entry here, and I got it at 85.11, and I'm just riding this up until I see a wash. So I'll put a trend line there, just kind of get me going. Look what happened. If I got an 84 at 85.11, look at this, 86, 87. All right, this stock went up 2 points. So on a 100 share position, I would have made $200. All right. So, and what you guys got to understand is that these small wins are what build your account. Like, I'm assuming most people that are trading and they got a job. So this is like little side money. What you want to do is you don't want to take this money and spend it. You want to build and grow your account, because once you have a sizable account where you have 30, 50, 70, $80,000 in a trading account, you can size in a little more appropriately and make more money. And when you see these guys like Tim Grattani and Steven Dux and all these guys that are making these huge wins, it's because they're taking a lot of size. They're taking a lot of size. They're taking a lot of shares. So that's when and more risk, more reward. But when it goes against you, you lose money. So so don't be afraid if you got $10,000 in your account to take a 100 share position on a stock that's $86. It's $8,600 for 100 shares. So it's worth the risk because these stocks move in points. So I just wanted to talk about that, just give you a heads up. But let's build our watch list. So when we run the scan, we have 44 plays. This summer is not like last summer. Last summer it was ridiculous. Like the way stocks were moving was incredible. It was like no slowdown last summer. Much more volatile, much more active. But there's still plays. You just gotta be very specific about what you're looking at. So let's create our watch list. We're gonna create it for 7/24/17. I'm gonna hit save. We'll start from the top. So the first one is Dries. Dries. Now this moved. This is back up because it reverse split again, and CEO Kalani. He just keeps. This is like total stock manipulation. They keep reverse splitting to dump more shares, to unload those shares, and they make more money. They're just manipulating the stock and making money. Now I saw Dries running like somewhere, like I caught it somewhere like in the three after it broke $3. I was actually waiting in a chair in a barbershop, and I actually caught it. Now I put up the chart on my phone app. And I saw the stock continue to go up, and I knew there was going to be a reversal because it's a reverse split. The stock is dog shit, so it's not going to hold. But the shares though, you see the float is getting smaller and smaller. That's why. So that's why the stock is running again, because the float, the shares available to trade, are becoming less and less and less every time they reverse split. So you got to be kind of scared. But what happened was the stock took a reverse, and I was waiting for the reverse. And once I saw it kind of come down here to this, like, let me zoom out a little bit. Once I saw it kind of come down here and then bounce and then form, I saw it like struggling between to break 360. If you notice here, it couldn't break 360. It kept like coming down and up, down and up. And once I saw it tap like the third time right in here, I was comfortable enough to get in. I was scared as shit though. I ain't gonna lie to you. And I was doing this on my phone app, which is horrible. But I was able to get in. And I went. I sized in pretty heavy, about 10 shares. And you know, I just watched this thing collapse. And that's why I saw that it couldn't break this resistance level right here. Even on the phone, I'm not. If you notice here, I'm not using. All I'm using now is VWAP on the 1 minute. I'm not even using EMAs or any of that anymore. I just stopped using it. I'm just focusing on trend line support and resistance. On the 5 minute, I'll still use the 13 EMA and VWAP for confirmation. But on the 1 minute, I'm not even using the 9 EMA. I'm not using the 20 EMA no more. I'm not using the TTM squeeze. I'm not using any of that anymore, guys. I'm just simply going off price action and value. That's what's really driving me right now, and it's working well. And I'm doing better, to be quite honest with you. Now the way I've taught you originally, you can still use those indicators, but remember, what matters the most is the patterns. That's what matters more than anything else, is the patterns. All right. So you know, I'm still in dries. I'm up. I think about $13,000. I'm gonna hold. We'll see what happens. We're probably gonna get a bounce. So get ready when that sell off. There's gonna be a major bounce. I don't know if it's gonna be. Maybe I cover. Maybe I hold. I can hold up to 3 days. We'll see. But I think this goes back below $1. But we'll see. And then I can make a substantial amount of money. So you know, I try to get more. If it was up to me, if I could have went in 50,000 shares or 100,000 shares, well, I didn't have that kind of money in my bank account, but you know, in the trading account now. But shit, if I could have went more, I would have went more, to be quite honest with you. It's just like easy money. Anyway, with that said, is it gonna be on my watch list? Yes. All right, so let's keep moving. Tier was another stock that went crazy. It went from 180 to 375, and you know, this is, so I want to show you guys something, right? So let me zoom in here. So you see the stock runs, right? It has that gap up, it has that pullback. So is that pullback to pullback to VWAP of all things, right? You had that second push, then you had that pullback to bullwap, right? I mean to VWAP, right? And then you get that third push up, and you know, right over here topped up, right? I try to short this somewhere in this range. And I couldn't get shares. E-Trade didn't have any shares to short, so unfortunately I missed that. But look what happens. This is another way you can go long. When a stock has a run like this and you see it come gaps down, now you kind of gotta be watching this. But if you notice at 1026, this stock finds its support wherever. Once you see a stock kind of gap down and find its support, always put a trend line. Okay, always put a trend line, because what you want to look to see is that ABCD pattern where stock gaps up, that's A, pulls back, that's B, gaps up, that's C right here, this would be C right here, and then the D would be runs up. So when you see the stock, and this play happens again and again and again, when you see a stock pull back and you see it finds its new support level here, and you see it gap up and kind of pull back again, and you see it's doubling, usually by like somewhere between 11 and 1, you're gonna see the stock slowly grinding up, and you notice it's forming now a higher low here. See how it pulls back again, but it forms this higher low right here. Forms a higher low. Let me zoom in. It forms that higher low here. What is that telling you? This is a good entry. So what you could do here is you can say, okay, it's forming a higher low. It's right below VWAP. If once it breaks above VWAP, I'm gonna take a trade on it, and I'm gonna risk the previous support level. So the previous support level was 280, 288. Here it's 280. You can risk to either the 288 or the 280, and it's a good entry. You know your risk, you know the reward, and look, it goes up. And a lot of this pattern just continues to happen again and again and again. You see, look, it continues to go up, and you know, kind of comes back, and look, it forms a new lower high right here, right? and look, it's a double top right here. So that's double bottom. See how it comes down now to 323, comes back up, back down to 323, and then it goes up. So let's say, had you entered here, you could have said, okay, what's the previous support level? The previous support level was 280. Was here. Which was what was this? I'm sorry, guys. Which was $3. Okay, so you could have got in here risking 30 cents. Now that could be a lot, could be a little. Now if you're risking, if you go sizing in 10,000 shares, yeah, that could be substantial risk. But if you're using 1,000 shares, it's not as bad. Where you're only risking a couple of hundred. It just really depends on how much your risk tolerance is. But that's how you can size in and go long. Okay. And I've been looking at this to do this. So that's why it's so important to know support and resistance levels and know the pattern. So look, right, it gaps up, and about 1 o'clock it finds its high a day, and then look, it finds its high, comes down, kind of forms back up, but look, it forms a lower high. So right, so now if you're watching this, you make sure you have your your trend line here, and you see it gap up. Say, oh shit, look, it got up, it hit a high of 373, it formed a lower high. So what you could have done at this point is, once you see that lower high form, you can just take a short on it if there's shares available. Now there wasn't no shares available, but I'm just teaching you in terms of like patterns. What you do, you take a short on it and you risk 2 cents. That's a great risk reward there. 2 cents to make 30, 40, 50 cents, $1, depending. And look what happened. It never got back up again. It just completely faded down. Now it's holding its new support level here at this is what let's see, this is the low is 309. So so this is gonna be on the watch list. More than likely, let's see what happens. That's what you should be looking to see when the market opens come Monday. Is it gonna bounce off this 313, or is it gonna break below? And then you got to keep looking at what were the previous support levels. And that's what you're looking to see, if there's going to be a bounce off those support levels, because that's what everybody's looking at. Forget the indicators. Everybody's looking at support and resistance. That's what matters more than anything else. All right. So that's going to be on the watch list. Next up, PE. And I hope you find this helpful. I'm trying to give you guys entries and exits. Nobody really talks about this kind of stuff, which to the life of me, I don't understand why. PETQ, look at this. This is a $20 stock, 4.3 million shares traded. Very difficult to, this is a stock now, it's holding its highs, and if I was like these kind of stocks where there's really no trend and you see spikes like this, I would look at the yearly chart. So I'm gonna put up the yearly chart here because I have my indicators on this side. This is the first day it was listed on the market, so you can kind of get a sense to see. Now what I would do is then I would look at the stock, I would look at the fundamentals, see what the stock is. Maybe it's a stock worth investing in. I don't know anything about this company. All right, but I'm not gonna put on the watch list. But that's I just want you to understand these things. Next up, TOPS tops. It's another stock that every now and then this has its momentary spike. So tops is a sympathy play of drives. So stocks in the same sector, there's always one stock in that sector that drives the other stocks to do other things. So if you could find shares to short of tops, you could have had a nice opportunity here. Or once you see drives running, you could look at Tops or Ship or a couple other companies that are all in the same industry. And you could have took this for a nice ride. Look, breaks out, and it has this break. Let me zoom out. It has this gap up, and then it has the pullback. So these people that have got in here taking their profit because they're not sure if this is going to keep going up. Goes up, kind of sideways consolidation, keep up. And these are all people just taking profit along the way up. But eventually, look what happens. This is what you want to see. If you catch it close to the high of day, you definitely want to keep your eyes on it, because what you want to see is, all right, let me see what's going to happen. Look, it goes down, comes back up right here. This is the lower high right here. Oh man, look at this. It's great. It's 1 cent below the high, and you could take a short. Look at this. It comes back up. It touches double tops, 35 cents. That's a great confirmation that it can't break it. So you take it down. And this is how guys like Steven Ducks makes tremendous amounts of money, because they see this, and what they start doing is they take 500,000 share position on it, because it has volume, and they're taking 50, 60, 80, they're taking 6-figure positions on it, and they're getting even 10 cents on that is a tremendous amount of money. So You know, so that's what they do, and that's how they make these huge gains. But they risk when if the stock goes against them, they lose a lot too. So it's a big risk reward. Is it gonna be on my watch list? You know what? I'll put on the watch list only because if dry starts to run again, which we don't know, and I hope not, tops may run again too. All right, next up, PETQ. I'm sorry, I talked about that. EPIX, nope, choppy, dog shit. ESKO, nope, dog shit. You know, I don't like it. BONT, nah. A lot of these stocks, you know, look, it was 50 cents. It's 88 cents. I mean, look, maybe it's a good swing trade. I mean, I don't know. You can look at the yearly and see where it is on the yearly. So on the yearly, you know, it was a little overextended previously at 90. It got up to 96 cents. I mean, this went from 30 to 90, came back down to 50, about 48 cents. And now it's up on an upward trend. So I would be looking to see if this is going to hit 90. And maybe if you can find shares to short, it is a listed, it's a NASDAQ company. You know, maybe you can short it if you can find the shares. You know, Interactive Brokers may have shares. Who knows? So that's why I'm gonna put on the watch list. You know, I don't like the way the chart pattern is. It's too choppy. But if you notice, it formed a nice short head and shoulders pattern. So let me do that for a 5 day, 5 minute. I'm sorry, guys. So yeah, on the 1 minute, you know, and that's why I trade off. I trade off the 1 minute. You know, it's the higher day breakout here, and you know, it kind of gapped up, pulled back, gapped up. You know, found this head, and look at this head and shoulders pattern right here. Head, shoulder, and then the collapse. All right. Next up, DRNA. DRNA is moving 324 5 days ago, but you know, it's not. You know, this is like for day traders, it's hard. Like you're not day trading this because you don't know where your entry, you don't know what you're gonna risk. But you know, you may want to look at it for a swing trade because it was 324 5 days ago. It's at 415. Maybe it's a company worth looking at. I don't know. SLDC, nope. PLUG. PLUG. This is a stock that I wanted to short actually pre-market, but and E-Trade had shares to short, but the borrow, it was hard to borrow. And I don't know, they were offering, I don't know, it was like 60% or some shit like that. I don't know. I didn't think it was, maybe I should have, I don't know. In hindsight, you always think, but I thought it was too expensive to borrow to short, so I didn't take a short on it. Am I gonna look at it Monday? Nah, I think that's it for plug. I don't see it having another day. Let me look at the 5 day. Yeah, this is weird. I mean, it'd be good to short if you can. You know, I'll put it on here just so you can watch it because if you can get the shares to short, I mean, it's it. It had its run, so maybe you find shares to short and you can short it back down. CMBX, it's one of those wheat stocks that's been kind of running again. You know, it may be worth a swing. It's not liquid at all. I'm not gonna put it on my watch list, but keep an eye on it. ENVV, nah. This is a pump. So OTCs, this is an over-the-counter stock. Look at this, 51 cents 5 days ago. It's 84 cents. If you look at the yearly chart. Okay, look at this. The stock was at 0.6 cents back in December. All right, it started moving. You know, it started moving like in June of this year. Imagine you had 1 million shares. There's millionaires right now off this stock. This is a clear pump. You know, look at this. This had all these green days. You know, and if you look at the yearly on this with the indicators, look at the RSI. The RSI is at 90. So this thing is gonna collapse. Watch it. You know what I'm gonna put on the watch list? Because what happens is with these OTCs, when they collapse, this is a pump and dump. So when the dump happens and all the insiders that are in on the scheme pull their shares, the stock collapses, but then it has this crazy bounce. So, you know, watch if Monday is that day, you know, get ready for it. And I'm thinking it's gotta be close to the day because if let me pull up the yearly again. You know, look at the volume. The volume keeps increasing each day. This is the volume. So, you know, 3 days ago it had 1.8 million shares traded, then 2 days ago 2.9 million shares traded, then 5 million shares traded. So now they got all the suckers in, right? So it's gonna be easy for them to sell. So what they do, they dump all their shares on the open market. So I would think that Monday is probably D-Day, you know, but you can buy the bounce. So if Monday collapses, wait for it to find that support level and take a nice quick trade on it. You can make some nice money, and then it'll completely collapse to nothing. And then those guys will get in on another scam. All right, that's how the pump and dumps work. Now, if you could short it, that'd be great, but I doubt, you know, but E-Trade's not going to have it. Next week, I'm going to open up Interactive Brokers. I don't know how long it's going to take to get done. But if I had Interactive Brokers, I would be looking to short this if I can when the collapse happens. IPWR, nope. CYCC, nope. SITO. SCTO had this run, but it's not very liquid. But if you look at the stock over the last 5 days, stock was at 480, now it's at 648. So what you do is you look at the yearly, you get a sense of where it is. Well, over the yearly, it's broke its yearly high, and then it came back down. So it had it's I don't know where it's gonna go from there. To be quite honest with you, I would think that it's gonna be it's gonna pull back, because look at the RSI, it's very hot, so it's over 70. So I'm sorry. So what you're thinking is maybe it's gonna collapse. Now, if it breaks this support level here of 599, you got another support level of 589, and another support level of 581, and then next support level is 561. So you can expect a big pullback. So it might be a good short if you can find shares Monday. I'll put it just for that, just to that. And guys, another thing you should know, right, is I put all these stocks in my watch list, but it doesn't mean you're looking to trade all of them. All you need is one. So just look through the watch list, find one that you're comfortable with, and then watch that stock to find your entry, form your plan, and then execute it when you get there. That's all you need to do. One trade, guys. One trade is fine. Don't over trade, until you really know this game. RATC, nope. AKCA, nope. Let me put the 5-day 5 minute. It moved, and you know what's funny? You see why this is here? Because I was watching this Friday. I was watching this because I was seeing the double and the triple top, and I saw it wouldn't break 14. This was, I don't know, probably like noon, and then I got caught up and did something else, so I wasn't watching it, and it was choppy. It wasn't a lot of volume, but I knew it was going to probably, more than likely, I was going to short it. And look, and then the breakdown didn't happen till about 2. So if I was smart, what I would have done was I would have went in here. I should have not paid attention to it and created an alert to say, hey, mark it above, like, I don't know, below 1398, just to keep my eye on it. Say when mark is at or below 1398, remind to short if it doesn't break 14 bucks. That's what I should have did, and then hit create, and then what would have happened was the stock on my phone, it would have alerted me, and then I could have took my position. But that was my fault. That was me being lazy, and I could have took a short on it, because E-Trade had shares. I had checked, so and I could have took this. Look at this. Had I just been patient, I would have definitely gotten right here, because I know that right here would have been. Let me zoom in here. If 14 wouldn't break 14 and it's forming these higher lows at 13.93, I would have risked $14 and just took a big size. And look at this. I could have made a nice little chunk of money. This thing went all the way down to 13.38. So I missed that play. But you see, my point is, all you need is one stock, man. All you need is one win, And if you're under the PDT rule, you make your 3 trades a week, and you focus next week. You just forget about it till next week, and that's how you build your account, man. Just take the setup when it presents itself. So I missed my opportunity on this. Yeah, I was a little bummed about it. Why can I be bummed? I'm up 13,000 on dries. Anyway, BCLI. Yeah, this thing gapped. I saw this pre-market, and then it just completely washed the whole day. Now, am I going to watch it? I mean, it's probably going to be a good short, to be quite honest with you, because, it's normally trades in this 430 range, and it's up above it, and all you have is this 485. It breaks below 485. So what you can do is, again, you create that alert. Say, BCLI mark is below, let's say 486, short if it breaks 485. And there you go. This goes to your mobile if it does, and all that, and then you can get in, because there's nothing holding this stock down to 453. So if it breaks that 480, 45 mark, you're gonna get, it's gonna completely collapse all the way down to the 450s. All right. So I'll put it on the watch list just for that. Hopefully there's shares to short. I don't know if there's shares to short. All right. Next up, COF. COF. Look at this. This is that Capital One stock. It's up. Like, it went from $85 to $88. 3 points. And if you look at over the last 5 days, it was $80. It's at $88. So let's say you had taken a swing on this 100 shares, you'd be up $800. That's why you cannot discount stocks in these higher ranges. Don't listen to Tim Sykes when they're lying to you when he tells you that, oh, all these small caps move. They're lying. course he's want to say that. He wants you to become a student of his and give you more of your fucking money. You know, that's bullshit. So these big cap companies move too. Don't believe that nonsense that they don't move. They move too. All right. I'll put on the watch list. It's so overextended. You may, you know, maybe worth a short. And now what's great about, let's say you play all these big stocks, you're gonna find shares to it, even with TD Ameritrade. So yeah, TD Ameritrade, if you're trading stocks under like $20-$25, it's gonna be, you know, they just suck for shorting. But all these big caps companies, they're always gonna have shares to short. They're expensive and you can't take big positions, but hey, you know, at least you could take, you know, at least you could short them. BZUN, yeah, I was watching this too for a potential short, but it just kept running and running and running, and I didn't like it. I thought it was being manipulated. This stock though, BZUN, when it pulls back pretty hard, because I've traded this before, if I'm not mistaken. Let's pull up the yearly. Yeah, the last time this was at 25, look at this. This shit came all the way down to $18. Found its range and it's been running. Look, then it got up to 23, then it came all the way down to 21. So look, it's had a few green days. So once that reversal comes, get ready for that watch. It's gonna be big. That's why I put it on the watch list. So let's keep moving. ABVO, nah. And it did move. I mean, it did have this crazy spike and then it washed. But I don't think it's gonna do anything. ACBFF. MNRO is at 45. It's holding its highs at 48. You know, and on the 5 minute, that's why I like to have the 13 EMA, because you know, so you'll notice a lot of these stocks, they just ride the 13 EMA all the way up. You know, and it's best on the 5 minute. You know, and VWAP's here. You know, that I got this indicator with the green, when 13 EMA cross VWAP, you get a nice little move. Not all the time, but it's usually a very bullish indicator, at least in this market. You know, I'll put on the watch list, you know, because I know not everybody trades these small. I want to appeal to everybody, not just people who play the small cap companies. BSGLQ, nope. CBay, yeah, this stock has been, you know, moving. I was looking to make a play on it, and I did. I forgot. Oh yeah, I was watching it here when it was gapping down, and I caught it like right around here, and it was already, you know, it already come down so much, and I probably could have taken a short, risking the previous high. I don't know why, but because of the way it was moving, it was forming these higher lows here, and it came down. I thought it was gonna probably more than likely find its support here and bounce, but no, it didn't. And I could have taken a short. I don't know. I got distracted, but it would have been a good short entry here. But it found its support all the way here at 743, and then you notice here it forms that double bottom. So when you see that double bottom form, you see how this becomes a new support level. See, 1, 2, 3, and it starts forming the higher lows. When you see that, that's when you get in, and you say, okay, I'm gonna get in, and I'm gonna risk the support level, which is 743, and you could have took a trade on it, you know. And when they get out, you know, you could stay until it breaks the trend, or you know, just lock in profit on the way up. You know, look at where the next support level is, so, you know, because those are gonna now those support levels act as resistance. You know, so me, if I would have gotten here, I would have probably been looking here to see if it breaks it. If it breaks 770, I keep on. If not, but you know, at some point it's gonna pull back, and it did. It got up to 784 before it came back down, bounced off VWAP, and continued up. So we'll keep watching this. You know, we'll see what's happening Monday. It kind of closed, holding its highs again. So we'll see what happens come Monday. DDS, look at this. Dillard's was $58, $68. Now, look at that. Now imagine if you took Dillard's for a swing with 100 shares. Okay, just a 100 share position on Dillard's. Now, obviously, this is 2020 hindsight, but look at that. 100 shares would have got you $1,000 already in 5 days. All right, and if you watch this, this pretty much rides the 13 EMA for the most part for 5 days. I mean, there was a moment or two where it kind of dipped below it, but barely ever it's ever been under it. You notice. So you know, it's probably gonna pull back because it's up so much. Let's look at the yearly. And look, it's had 3 green days, and you see the RSI is hot, so I would be looking for a short. I'd take a 100 share short on it. It's probably gonna come down $3-4, you know, and you're risking so little. If it goes up, if it goes 100, a whole point against you, you're only down $100. That's kind of like the beauty of trading these higher price stocks, you know. So it's just some stuff to think about. You know, I'm evolving as a trader. You know, I'm not, you know, I used to just listen to what, you know, these small cap gurus sort of would say, and I'm learning a lot more. You know, just kind of exploring. Next up, SPRT, XPRT. You know, had this. Oops, let me zoom up. Look at this. Had this crazy move from $41 to $44. Now, let's say you took a 100 share position on it. You know, look at that. You know, $300 your potential to make. You know, so you know, and then it got here, and then it formed a lower high, and you could have shorted this. Even 100 shares. At, let's say you would have sold up here, and you risked a 43.98 because this is where it forms the lower high. You know, and boom, you take this all the way down, and look at this. You would have made a couple of $100 shorting this. Look at this. All right, so you know, and then it kind of gaps back up, and you notice here. So let's say you see the stock go all the way down. It finds this new support level here. Again, this is how you trade it. So you say, okay, the low is 42.40. All right, and if you see it starts forming higher lows. Now you see right here it formed the higher low. Right here, I could have taken a trade on it in this 42.60 level, risking the 42.47 level. And if you notice, look, it comes up, comes down, but it never touches it, and it goes up. So if you had the patience, you could have took a trade on it, you know. And that's what it's all about, knowing your risk reward. All right, knowing your risk reward. Okay, let's put it on the watch list. All right, so I gotta end this video because I gotta go. But SRPT. But I will finish my watch list because I got a couple of stocks. I don't think any of these others I would put on. Maybe ARGO because it did hold its highs. I'll put this AGRO. I'm sorry, I'm not gonna go into the detail of the trade. Just there's a couple of others, but I'll post my watch list to Twitter. watchotrade. I gotta run, so there's a couple other stocks here that spiked. So you know, I'll look them and I'll add whatever I think is worth adding. There's only like these are the rest of the stocks that I'm looking at came up with my scanner. All right, so hope you have a great weekend. It is July 22nd, 2017, and have a great one. Email me, like, and comment. Have a great one, guys.